In this video, we're going to look at the recent decline in the price of copper. Copper is down about 16–17% this year, most of the fall occurring since the early part of June. So what is it indicating, if anything? Now, many people talk about copper as being seen as a barometer of global growth conditions on the basis that it is a metal that's used in a number of different uses: wiring, generators, electrical goods, air conditioners, and so on and so forth. So it is considered to be a barometer of growth. It's also considered by some to be an indicator of risk appetite or for equity market performance. So in this video, we're just going to investigate some of those claims. So you can see here the recent chart of the copper price, so the fall that we were talking about. But let's have a look at previous declines in copper going back since the late 1970s. So what we're doing here is we're identifying a number of regimes, if you like, where copper has suffered major declines. Black is the most recent one, around about 15% on a monthly series basis. There's been falls of 65% during the 2008-2009 period. We've also seen quite significant declines in the late 1990s, where it fell by about 45%. But more often than not, the decline has been somewhere around about 20% over 6 months, and around about a 30% decline over a 12-month period. So the decline that we've seen to date is still fairly modest by comparison. So now I'll just turn our attention to looking at growth and downturns in copper prices. So what we're showing here now is we are showing the declines in OECD IP from the level of growth that they achieved at the peak in copper prices and during the period of which copper prices are declining. So you can see here the black line showing that when copper prices started declining at the beginning of this year, global IP was running at about 4%. It's since fallen to about 3%. You can see how global growth has been declining in all those other periods. So it would look on the surface, at least, that declining copper prices are associated with or is associated with a decline in the rate of global economic growth. If we remove some of these extremes, so these two periods here, obviously the Great Recession and also the previous recession at the turn of the century. So if we remove those two occurrences, we'll get an idea what happens sort of on more typical downturns. And you can see here the average line has growth slowing from about 4.5 to around about 3.5 after 6 months, and to an average of about 2.5%. So not as significant, obviously, as those bigger downturns, but nevertheless, it seems that those copper declines have been also associated with reasonably sized downturns in global growth. The same, we get the same message when we look at the ISM index. On average, the ISM has started the beginning of copper price declines at around about 54, declining to around about 48 to 49 over a 6-month period. So the decline in the ISM that we've seen on this occasion is very muted compared to previous declines. So perhaps it's not providing as good as an indicator of declining growth in the past. Although it might be suggested that it has more to do with growth in emerging economies. So we'll look at emerging economy IP growth rates. You can see there on average they've declined from about 7% down to around about 2.5% during those periods of declines in copper prices, with of course the major downturns occurring: GFC, the last recession, September 2000, and also the late 1990s copper price decline. So to sum up, it is associated with downturns in growth. Of course, the larger the downturn, the bigger the downturn in global growth. So what about implications for other assets, in particular equities? That's our focus here. So let's now look at the performance of the S&P 500. I'm just going to shorten that time period. So what we're looking at now is the performance of the S&P 500 just in price terms during those periods where copper prices have suffered significant declines. And really here the evidence is quite mixed. There are 3 occasions where over a 6-month period at least that the equity market fell once again: 2008-9, the recession of 2000, 2001, and then the downturn that occurred started in early 2011, although that subsequently recovered even though the copper price was still declining. So on all other occasions, you've seen the equity market continue to rise. What about if we use a different index? We use the MSCI World. Similar story. 3 occasions where it's declined, at least in the 6-month, really only 2 months where it's continued to decline while copper prices were declining, and all other occasions, despite copper price falling, equity markets were able to rise. So on the one hand, it would appear that declining copper prices is a good barometer of growth. Might not tell you much about the severity of the downturn, tells you about the momentum, but on the other hand, not a very good indicator for equity markets. On a few occasions, it has fallen and equity markets have fallen, but they've been in these significant downturns in global growth. On all other occasions, equity markets have managed to rise. Thank you.